The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
I'm Mike Armstrong. It's actually Chuck Zodda and Paul Lane with you today, and it is one of the...
No.
That's the one. It's one of the busiest economic day-to-days of the year, and golly gee willikers, I'm excited, Paul. How about you?
Am I on? Okay, there we go.
Good start here.
Chuck is Mike. My mic's muted. We've got all sorts of things going on. I am very excited. Chuck had a great Halloween yesterday evening, so looking forward to getting into the stack today.
I'm going through. I had a little bit of a candy hangover this morning, so I popped a couple Twix, and I'm back in the saddle at this point.
All we need is 2 hours out of you.
What's that?
All we need is 2 hours out of you, and then you're good to go.
Yeah, I'll keep pounding them all through the show. Here's what we have today. At 8:30 a.m., we got the Treasury Department's quarterly refunding announcement, which is really a nothing burger. No one cared about it until this time. I don't know if anyone's going to care about it again, but we had that at 8:30. 10 a.m., ISM Manufacturing and JOLTS, the Job Openings and Labor Turnover Survey report. Then we have the Fed decision this afternoon at 2 p.m., Jay Powell press conference at 2:30. So we've got a full day of economic data here, and that's before we even get to tomorrow, where we've got Apple earnings and jobless claims, and then Friday we got the jobs report. So it's a busy day to get through. But we'll start talking about the Fed, which, Paul, this to me strikes me as one of the least anticipated Federal Reserve meetings that we've had recently, just because they're not really expected to do anything. They're not really releasing their new dot plot or any new data like that. It's just kind of another day, which is nice.
It is nice. I was trying to find something of note to really bring up with this meeting, but to your point, there really isn't a ton to cover. They're really, I would expect, not going to give much commentary on what they'll do in December. They'll continue to kind of take the wait-and-see approach, so there's really not a whole lot, I feel, that we'll be able to take away from this meeting. They'll hold pat with rates, and the likelihood of any discussion on what would be changed in the future for December's meeting, I find that a very low probability that anything will be indicated on that end of things.
Paul, when we look at the Federal Reserve, it's an institution that I think rightly has received an awful lot of criticism over the last couple of years in particular for how slow they were to attempt to deal with the inflation problem. What's your sense in terms of giving some context to, hey, where are rates right now, and what are we seeing on the inflation side that warrants no further action at this point potentially?
To me, it's an interesting spot that we find ourselves in, where if you had told me that we were going to be sitting in and around, I believe we're 3.7% on CPI as of last month's reading, if we were going to be sitting at this point from 9.1% where we were in June of last year, I think a lot of us would take that progress if we were talking about this in July of last year. But it is an interesting point where we still have very strong, resilient economic growth on the GDP side of things and a tight labor market. Where the Fed comes in on all of that, the reason that perhaps they don't need to take any more action at this point in time is part of it is the spike on the longer end of the yield curve on the Treasury front, but that could be wiped out in a matter of weeks. That can be very short-lived. But really, I think it points to the fact that we're starting to see perhaps a little bit of a slowdown, and that can allow them to take the wait-and-see approach, even though Q3 data to that point was very strong.
When we look at that economic growth data, one of the things we've been talking about since that came out last week is the idea that we've likely hit peak economic growth for this cycle, just because 4.9% is not something that is repeatable given how GDP actually grows. If you look at the two components of GDP, the first one is the number of hours worked. And the fact is that we're, based on what we've seen historically, running out of ways to grow that, because if you look just as an example, at the age 25 to 54, in the age 25 to 54 demographic right now, 81.1% of people in that demographic are employed. The other 19%, some of them are unemployed, some of them are homemakers, some of them are in school. So there are a number of different things that you see there. But as an example, the peak that we ever saw in that in that 25 to 54 employment to population ratio was about 82%. It's about as high as it ever got. So you're running out of people in that prime age who can be working at any point in time, because, again, there are some that are always going to be unemployed, just because if you lose a job, you don't always pick a new one up right away. There are some that are going to be raising kids. There are some that are in school. So you never get to 100%. You never even get to 90%.
Right.
It's just not what happens there. So you can't grow hours worked too much more on that side. The U.S. population is growing, but it's growing at like 0.8% a year. So, yes, you pick that up in order to grow hours worked. I guess people can work more hours in a week, but how many people realistically are like, yeah, I'm really looking to add, another 5 or 6 hours a week?
Not many.
There are some, but they're also offset by the people who are like, hey, I'm trying to maybe wind down a little bit. So, that's something that you deal with. And so the hours worked component, maybe it can grow by like 1 to 1.25% a year. And the rest is productivity, which is how much stuff do you actually produce in that hour of work. And this is where some of the hype is around things like AI, that AI might be able to turbocharge productivity. But, Paul, if we're being honest, it hasn't really yet, outside of people writing articles.
It's probably something that's going to take at least 5 to 10 years before you'd see any meaningful impact on that end of things. It's just, there's such a long way to go with that part.
So economic growth is probably going to slow. But slowing economic growth does not mean recession necessarily. Just as an example, Atlanta Fed, they put out their GDP Now calculations. They update it upon the release of major data that comes out. The next one, I believe, is updating later today once they put all of the stuff from today into their model. But the first run for Q4 came in last week, projecting 2.3%. There's a wide error band on that, so it could be anywhere, from maybe 4.5% down to 0%. But either way, it's saying, hey, you're probably going to slow from 4.9 because that's not realistic. It doesn't mean that you inherently go into recession, and this is what the next few months is going to be about, which is figuring out what's the trajectory down from that really rapid growth of Q3. Are we heading back down just towards kind of that 2 to 2.5% norm that we saw before the pandemic? Or are we taking a little bit steeper dive as higher rates start to bite, people run out of excess savings, and maybe we see a pullback in consumer spending? Maybe that's where things head to. But these are the questions, because to this point, all we've seen for the first 9 months of the year is an acceleration in growth.
Chuck, on the GDP side, you talked about the productivity piece of things, but on that consumption piece that you were just mentioning there, that perhaps if we get a slowdown there, to match the levels we saw in Q3, and I don't have the data in front of me, it would seem as if the consumer would need to be incredibly resilient to keep up that pace. And that's probably another reason why we couldn't even come close to that number we saw there. Has any indications on the data side of things, on the consumption, how much we'd need to kind of sustain at that level?
Yeah, so in Q3, consumer spending grew at a 4% annualized rate. Mm-hmm. If you look at the full data set going back to, I think, 1954, I think is when it started, consumption growth has averaged around 3.3% over that time.
Yep.
And since the financial crisis, it's averaged 3%. So
Got it.
to say that we're going to do a repeat of 4% consumer spending growth in the next quarter, maybe it happens for another quarter. It's not something you can bank on unless you are seeing, that kind of wage growth in the long run. And what we are seeing is that wage growth is slowing back down towards more normal levels, though it's still elevated at this point. So I would say that anyone who's banking on the U.S. consumer repeating their Q3 performance, I would say it's unlikely, and if it does happen, it's maybe for another quarter, and then you've got to see a pullback there.
Would be a heck of a holiday season.
It would be. Let's take a quick break right now. When we come back, piece in the Wall Street Journal: the economy's great. Why are Americans in such a rotten mood? This is a really important question, I think. So let's talk about it when we return.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Fall is in full swing. The cold weather is coming, and now is the perfect time to get a head start on your next vacation. The U.S. Virgin Islands have been named one of the top Caribbean destinations so far this year, according to Travel Pulse. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Paul, question for you.
Yes.
Inflation over the last 12 months has fallen from 9.1% in June of last year down to 3.7% today. You've got unemployment today running at 3.8%. Both of those, obviously the inflation piece is still concerning, but far less so than it was a year and a half ago. The unemployment side of things, I continue to say that pretty much anyone who wants a job has one. Wage gains are still pretty robust. We've seen a couple of very successful union negotiations this year. And yet, despite that, what you see is people rating the economy poorly. And I'm curious to get your thoughts on why this is. I've said for the last year and a half, well, the reason they're rating the economy poorly is because of inflation, which is something just that we haven't seen in the last 40 years. And so even though wages have grown, you don't necessarily have them keeping up with the prices of things.
Right.
That has reversed in the last 6 months now, and so now you actually have wage gains outpacing inflation, but polling on the economy remains bad. I'm curious to get your thoughts on it.
To me, it is tied in directly to this idea that just the absolute level of prices are higher than they were 2 or 3 years ago, which shouldn't make sense from an economic standpoint if you look at, to your point, where inflation and those price increases or those wage increases have gotten to at this point. But I feel as if the consumer is still sort of reeling from the inflation that we've seen in this compressed period over the last year and change or so, where groceries, home prices, all of these have just elevated so much in a short period of time. While wages have caught up with the increases, psychologically it seems as if consumers really haven't resigned themselves to the fact that your grocery store run, if it used to be $100, now it's $150 or $175, whatever the case may be, just people haven't fully wrapped their arms around that, and that's why you lead to such poor polling here. But it was very interesting to see in this piece the misery index, which assesses inflation with unemployment. Historically, if you look at these two combined, we should be much higher in terms of a consumer sentiment standing. That did blow me away, Chuck, to see how low it ranks, even though you do hear it a lot when you talk to clients that there's just a level of frustration out there.
Now, the other thing that you are seeing is that people are rating the economy poorly as a whole, but when asked about their local economy, they rate it better. And when asked about their personal financial situation, they rate it even better than their local economy. So you try to figure out what's going on here. And on one hand, you could point to, well, maybe people are just interpreting the broader economy based on what they see on the news as opposed to their own situation, which is based on their personal experience. That's possible. But I would discount people rating their own personal situation highly because we saw that even during the Great Recession back in 2009 through 2011, just as an example. You still saw most people saying, yeah, like everything's really good. And I think part of it comes down to almost like psychological preservation in that if someone asks you how you're doing, isn't your default answer, oh, I'm good? You don't just go up to, hey, how you doing? Man, it sucks right now. My life is horrible. You just don't do that out of like common courtesy. I'm not saying it's right or wrong, but it's just how it is. So I think that when we look at, why people are rating the economy poorly, I think that ultimately we also have to remember that we've all gone through a lot of crap in the last 3 years.
Mm-hmm.
It's been hard. I mean, go back to 2020 and just how much of a shock that was, just psychologically. I mean, I think sometimes we forget what it was like, where the entire country just kind of shut down in March for a little bit. And then it was just kind of clawing and trying to get everything back together. And you still have businesses that are scarred from all the supply chain issues they went through. And they went through 2 years of hell trying to get everything back to normal. And maybe they're just finally getting there now. And so psychologically, they're just kind of burnt at this point. And individuals, I saw, the prices of this and that go through the roof, and it took me forever to get this. There's just kind of some lingering dissatisfaction, I think, as well. So I think part of it is when we're rating the economy, we're not necessarily rating what we're seeing today. It's kind of, hey, what have we gone through and how is that making us feel? And the fact is the economy's been rather bad for a lot of the last 3 years for various different reasons.
And also, these two elements that we're talking about here, both inflation as well as the higher borrowing costs out there, are elements that consumers haven't had to deal with 15, 20 years plus. It's just been a really long time. So perhaps that reemergence of that has psychologically shaken up the consumer and investors out there a little bit.
I think that's realistic. And I think that here's the interesting question that I have, though. What will it take for individuals to feel better, to start rating this economy more highly? Because if things are pretty good right now, and I think they are, in my personal opinion, they're not perfect. Inflation's still a little bit too high. We've talked about deficits being too high as well, but you don't grade the economy based on the national deficit. Like, that's not what it is.
Mm-hmm.
I hate to say it, but with how things are today, isn't there a pretty good chance, like a year and a half or 2 years from now, that in some way things are worse? Like whether it's, hey, unemployment could be 4.2%, or maybe inflation's back to 4. It feels like we're pretty close to as good as it gets. So I guess my question is, in what world are people going to actually say, yeah, the economy's good?
I don't know if this is because it's the job that we do and we're so focused on the market every single day, but perhaps a strong stock market year. And I know that doesn't touch everybody throughout the country because, there's only a select population that really invests heavily, but perhaps that might do it because I do think psychologically 2022 is a very bad year, obviously for the stock market, but for the 60-40 portfolio, that may play in a little bit too if we see some of that. But overall economic conditions, lower rates and higher economic growth, I just don't know how you'd get the perfect cocktail to meet what everyone's looking for without creating adverse effects, to answer your question. I struggle to find that.
Yeah, and I know I've seen some responses that talk about this, and they're like, oh, well, it's political. Republicans are rating the economy poorly, and Democrats are rating it good because of who's in office. And the answer is, well, yeah, that's true, but the same phenomenon has happened for the last 30 years as well. So that doesn't explain it. Like, you go back and you look at the Trump administration, Democrats rated it poorly, Republicans rated it well, vice versa during the Obama. So, that doesn't explain it in and of itself. Let's take a quick break, and when we return, we got Wall Street Watch, and we're joined by Todd Lutsky.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV in the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Susan and Mike from the Armstrong Advisory Group, and this month we're talking about our free guide, the top year-end financial tips. Mike, the holidays are coming, and that brings with it the desire to gift to your family. What are the rules around the annual gifting limits?
Well, you, Susan, owe me a gift every single year, as we know. But I don't think that's what we're actually talking about. What the rules state is that you're able to make gifts in 2023 up to $17,000 without triggering any sort of reporting or paperwork requirements to the IRS. If you go above that $17,000 exemption amount per person, then you do have to file a gift tax return. But it doesn't necessarily mean that there will be any taxes owed. That's where a tax professional really comes into play here to make sure you understand what the ramifications of that are. But, gifts to 529 plans, for instance, if you're looking to fund a specific goal, are very common this time of year.
So if someone's thinking about gifting away as a strategy to reduce their taxable estate, Mike, how do they go about that if they want to give away much more than the $17,000? That's the freebie, if you will.
Honestly, more than we can get to in a quick discussion, but you need to talk to a couple of planners here to make sure you understand the tax ramifications and understand the current limits, because states like Massachusetts just completely redid their estate tax, so there's new things to know about that type of strategy.
Folks, we have information about gifting as well as much more in our brand new guide, The Top Year-End Financial Tips. You can get your copy today by calling 800-393-4001. That's 800-393-4001, or request one online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in positive territory as Wall Street awaits the conclusion of the Fed's policy meeting at 2 o'clock. where it is widely expected the central bank will keep rates steady. Fed Chairman Jerome Powell will hold a press conference soon after at 2:30. Right now, the Dow is up by 0.5%, S&P 500 up by nearly 0.75%, and the NASDAQ up 110 points, just below 1%. Russell 2000 is off, however, by 0.33%. 10-year Treasury yield is pulling back by 8 basis points, now at 4.79%, and crude oil up just over 2%, trading at $82.76 a barrel. According to the Wall Street Journal, WeWork plans to file for bankruptcy as early as next week, citing people familiar with the matter. Now, Chuck and Paul will have more on WeWork, a company that was once valued at $47 billion in the 11 o'clock hour of the show. That stock down by 52%. Meanwhile, shares in AMD are up by 6% after the chip maker posted weaker than expected revenue guidance for the fourth quarter. However, the company did offer positive guidance for next year for its data center GPU segment. Elsewhere, CVS Health shares are down by 2%. After the pharmacy chain posted better than expected third quarter earnings and revenue. However, medical benefit costs came in at 85.7% of premiums, 1% higher than estimates. Boston-based Wayfair shares are up by 1.5% despite missing third quarter revenue expectations. And Match Group posted weaker than expected revenue guidance for the fourth quarter of between $855 and $865 million, short of analysts' expectations of $895 million. Shares in Match Group are down by 17%. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
And as promised, we are now joined by Mr. Todd Lutsky from the law firm of Cushing and Dolan. If you have a question for Todd, this is your chance to ask him that question about your estate plan. We call the segment Ask Todd for that very reason. So, get calling at 888-205-2263. That is the number to call to speak to Mr. Lutsky right now on the air about your estate plan or about your lack of estate plan if you're feeling, maybe you need to get started or something like that. That number again is 888-205-2263. One more time, it's 888-205-2263. Mr. Lutsky, how are you today?
I'm great. How are you?
I'm a little bit confused. Have you seen the Dog Bowl?
No, not at all.
I never knew that he could either.
That's true.
So let's talk a little bit about gifting, just because it's never too early to talk about gifting when it comes to, the end of the year and the holiday shopping season.
Yeah.
But in this case, we're talking about gifting of assets. And let's say that someone has assets that they want to gift. First question that I'll ask you is, what is the annual amount that someone is allowed to gift with no tax consequences or no filings or nothing due at the time of that gift or any time after?
Yeah, good point. Gifting is a very complicated, although it seems easy for everybody. You could just, write a check, give things away, give assets away. It's way more complicated than that, and lots of thinking should go into it. But to answer your quick question, one of the things you can do is if you do want to make a gift and not have to file a Form 709, which is a gift tax return form that is filed in the year following the year of the gift. So if you make a gift this year, it would be April 15th, along with your income tax return, 2024 for 2023 gifts. However, you don't have to file that if you make a check for $17,000 or less to anybody. So to Chuck, to me, to Tucker, to anybody you want, once a year, free of filing, and no gift tax return is due and no gift tax is due, and it doesn't eat into your exclusion.
What happens in the event that you gift over that limit? Is that something where you have a big tax bill due, or the person receiving it has a big tax bill due?
Yes. Also, great questions on this front, right? Because many people say, well, what if I want to give, help my kid with a down payment on a house, and I want to give him, $100,000 or $200,000. Well, you could cut the check for $200,000, and remember, folks, the recipient never has a tax due. There is, first of all, never any income tax associated with a gift. Doesn't happen to anybody. And the recipient not only does not have an income tax, but does not have a gift tax. They're just getting the asset. Easy. Unfortunately, the giver, no good deed goes unpunished, right? So the giver gets the tax bill and has to pay the gift tax. So how does it work? If I gave away, just to keep the numbers easy, if I gave away $217,000 to my daughter to have a down payment on a house.
Yep.
Well, the first $17,000, that's that freebie we talked about earlier. You don't have to do anything with that. However, because you're over the 17, you got to report the whole $217,000 on a gift tax return, Form 709. The first 17 is a freebie, so the taxable gift is $200,000. And after you back out the 17, the $200,000 you would be subject to gift tax. However, we have this once in a lifetime, currently $12,920,000 gift tax exemption. I know it's the same as the estate tax exemption, but it is a gift tax exemption. And you would simply eat into your $12,920,000 exemption by $200,000, and then you would have no gift tax due, but you would have less gift tax exemption going forward. Just because you don't pay the gift tax, and just because you could, if you're listening, give away $12 million and not pay a gift tax, I'm not suggesting that you do that.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. We call the segment Ask Todd because it's your chance to ask Todd your estate planning questions. The line here is 888-205-2263. That is the number to call to ask Todd a question about your specific situation right now. Again, it is 888-205-2263. One more time, it's 888-205-2263. Todd, what kinds of stuff can you gift that falls under that $17,000? Is it just cold hard cash? Can you gift stocks, bonds, real estate, companies? What can you actually gift using that money?
Yeah, you're technically able to give away, as any asset you want. But now when we leave that and we go into this other area of giving, we talked about dollar amounts initially, but when you leave that and you go into what you want to give, now you open up another can of worms. Well, does it make sense to give away that rental property or that vacation home that I might have bought years ago that have a very low basis in the property? And then what happens if you give away low basis property? You stick somebody with the capital gain on the other side. So giving away low basis assets is not always the best way to go. So you have to now start thinking about what assets make sense to gift and how to gift them. And I certainly think we should explore that as we go forward.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. Your chance to ask Todd your questions is right now. Call 888-205-2263 to ask Mr. Lutsky your estate planning questions. That number again is 888-205-2263. We're going to take a quick break right now, but when we return, it's straight to your questions with Todd. So get on the line, 888-205-2263. Quick break, and then right to your questions.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visit usvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you have a question for Mr. Lutsky, the studio line here is 888-205-2263. Again, that is 888-205-2263. Todd, suppose that someone wanted to make a gift in excess of the annual gifting limit. How can they work together with their spouse, and maybe even how the calendar works to try to get some extra money going towards a certain individual?
I think I want to do that, Chuck, but I want to go right to the callers if we could. I think we got a caller queued up already. So let's just, in the interest of time, I just want to go right to the caller.
Tucker, I didn't see your email. I don't see what I have here.
Mark in Orleans.
We got Mark in Orleans. Mark, you're on with Todd Lutsky.
Hi, Todd. This is Mark. I want to discuss my mother's estate. Her estate's worth about $3.5 million. $2 million in a house, $1 million in a piece of property, buildable lot, and about $500,000 cash. We're thinking about gifting the property to one of my brothers and trying to get her total estate down or as close to the $2 million level. Is that a good way to go, you think?
Yeah, this is a great question. A lot of people ask something like this. So what I heard was about a $3,500,000 estate, a $2 million property, and $1 million in money and $500,000 of other. Is that about right?
$1 million in a piece of property, a separate buildable lot property, and $2 million in a house.
Okay, so $3 million.
Correct, and then $500,000 in cash.
In cash. So remember, you're only taxed technically on the amount over. Well, not really. Even now under the new rule, it still bumps you up the rate schedule. But remember, on a $3.5 million estate, the mass tax will be approximately, you figure, 3.5 minus 2 is 1.5. You're looking at maybe $150,000 in tax. Okay?
Correct.
But if you take this $2 million property and you give it away, right? What did they pay for that? Probably a very low bought long time ago, right?
Extremely low.
Yeah, so the gain on this property is probably $1 million, maybe $1.5 million, maybe more. Doesn't matter, right? Even if it's $1 million, you're going to pay 28.8% capital gains tax. So if you give that away now, then you give away the cost basis that's built into that property. And if you give that away, and let's say there's $1 million of gain built into the property, well, the person who goes to sell that property is going to have to pay close to $300,000 in tax. Well, if I keep that property and get a step up in basis when I die, so when your mother would pass away here, well, these assets would pass to the family, but they would get a brand new basis equal to fair market value on the date of death. And therefore, you would eliminate that built-in gain. And so, yeah, I got to give Mass $150, but I would have had to pay capital gains tax of $300,000 if I go to sell it because it has the gain built in. But now I've eliminated the $300. So the kids or the family members can sell the property, pay no capital gains tax, but they got to give $150 to Mass. It's a matter of picking your poison, right? I would be better off not giving away the house or the land. And for $500,000 of cash, I'm not jumping up and down about that, but you could give away $17,000 per year per person without affecting anything. But these bigger assets, I would not do that. I would probably, in your case, hang on to it. And the analysis for everybody is you have to pick your poison. You have to be mindful of what you're going to give away. If it has low basis, like in Mark's situation, maybe hang on to that item. Don't give it away. I think we have another caller lined up. Let's head over there.
Sure, we got Marty in Brockton.
Hello.
Hi, Marty.
How are you today?
I'm great. What's your question?
The question is, my daughter needs $100,000 for her house.
Yes.
Okay?
Yes.
If I loan it to her, will she have to pay taxes, or do I have to pay taxes on it?
Well, you want to loan her the $100,000?
Yes.
Well, if you loan her the $100,000, then the government's going to impute interest, and you're going to have to actually have her make payments back to you. Do you want her to pay you back?
No.
Okay.
I don't know how to give it to her without paying taxes on it.
Well, you don't. It's very simple. Write her a check and give it to her. And if you write the check, the gift, there is no gift tax due. Okay. So if there's no gift tax due, she doesn't have an income tax and she doesn't have a gift tax. Okay. So there's absolutely no income tax due for her, and there's no gift tax due for her. You, on the other hand, would have to file a gift tax return, but you won't pay any gift tax because you can give away up to $12,920,000 once in a lifetime without paying a gift tax. So if I was you, cut her the check, don't worry about the gift tax, and you should be fine. But folks, what I want to do is tell you a little bit about gifting, and you've learned from these last three callers that it's not easy to do. You have a lot of things that you have to think about when you do gifting. You have to think about, one, how to give it. Like in this case, just write a check. Maybe that's the way to go. You have to think, maybe I want it to go into an irrevocable trust so I don't give it away to them and let them own it right away. Maybe I want to control it. Maybe I want to worry about high basis assets versus low basis assets. You have to think which assets are better to give away. Well, we're giving away a new guide. speaking of giving, making the most of gifting assets. It's brand new for the month of November. Please call and get it before you make a gift. 866-848-5699 or go to our website, legalexchangeshow.com. You can download it there. Again, 866-848-5699 or legalexchangeshow.com.
Mr. Lutsky, thank you so much for the time today.
Always a pleasure. Thank you.
The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com.
Still a lot more to come as we get into hour 2 of the Financial Exchange, including a big shakeup potentially coming in the world of real estate, specifically real estate brokerage and some changes that might be happening there. We'll also talk about WeWork. We haven't talked about them in a while, so we'll have a little bit of information about the latest from them. And then also we've got the JetBlue Spirit antitrust trial beginning on the eve of JetBlue stock hitting a 12-year low. What does it mean for air travel and the future of it in the United States? All that and more. It's going to be coming up on hour 2 of the Financial Exchange. Stick around.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about the implications of gifting your assets away. Todd, what happens if you give your home to your child in an effort to protect it from the nursing home, and later on you decide you want to sell it?
Yeah, that's just one of the problems of giving away your house, but let's explore it. If you give your house to your child thinking, okay, that was easy, but now you don't own it. So now you really have no right to live there and, of course, no right to sell it. Right now, if you happen to have kids that are really nice and you ask their permission, which I don't ever want my clients to have to do, to say, please sell the house, you've also given them a huge tax liability because all the proceeds would go to them. Now, you don't have the money you need to buy your new house. And plus, if they don't live with you, then they don't get this capital gains exclusion that goes around along with selling your primary residence. So you're creating an adverse capital gains tax bill for them to pay. And then in addition to that, if they are nice, after they pay the tax, then they have to give you the money back, which could create a gift tax problem for them and impact their estate planning efforts. Finally, you get the money back, and then you can go ahead and buy another house. Folks, don't go through that. Set up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. the Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
As we kick off the 11 o'clock hour here on a busy day of economic data, it's Chuck, Paul, and Tucker. And let's recap what we've seen thus far for economic data. At 10 a.m., we received the ISM manufacturing data, which has been showing a little bit of bottoming in U.S. manufacturing. Potentially, a little bit of upward movement getting ready to occur on that side of things. Instead, what we ended up seeing here is that the ISM manufacturing report declined to a reading of 46.7 from a reading of 49. Where did it decline? Different components here. New orders declined from 49.2 to 45.5. Production from 52.5 to 50.4. Employment from 51.2 to 46.8. Inventories from 45.8 to 43.3. Prices went up a touch from 43.8 to 45.1. Backlog of orders was flat. So you might say, oh, gee, does this mean that there's a real problem, in U.S. manufacturing now? To which I'll say, maybe, but you have to contextualize that this was during a month where the UAW was striking throughout the country, and that was causing some issues on the manufacturing side. So maybe this is a new shift and a new slowdown in U.S. manufacturing, but I'm not entirely convinced of that, given that we had started to see some signs that this reading was, again, bottoming in the 49 range. Let's see if there's another one of these that pops up, but, it's something that you watch, but I think you have to contextualize it given what we saw in the auto sector and how that has impacts on all kinds of other manufacturers. Jolt's jobs report, or not jobs report, the job openings report, showed that we had 9.55 million job openings. That is slightly up from 9.497. So you got a little bit of a bump up there in job openings. Quits remained pretty much in line with what we had seen previously at about 3.66 million for the month. So not a huge shift going on in the labor market there. And that's the data that we've seen thus far. Later today, we're going to have the Fed meeting, their announcement of their decision at 2 p.m. and a Jay Powell press conference at 2:30. Our top story for this hour, though, is that a federal jury yesterday found that the National Association of Realtors and large brokerages are liable for about $1.8 billion in damages after determining they conspired to keep commissions for home sales artificially high. Paul, what happened? Your thoughts on it?
Chuck, so basically we had some homeowners band together. I believe that they were based out of the Midwestern states, where they had brought to trial this idea that under antitrust rules, the group of different brokerage firms out there representing many of the country's 1.6 million realtors conspire to keep commissions at that standard 5 to 6% selling off of selling price that we've seen for such a long period historically. One part that I didn't really get into the specifics is that were mentioned in the article here, what were some of the practices used, but it seems like just collectively they worked as a cohesive unit to make sure that they didn't get any lower than that standard 5 to 6% that we're used to seeing here. So what this means for home buyers out there is we could see a change in the commission structure that has long been sort of well established at that standard rule of thumb of 5% on future home sales here.
And just to give people an idea of how this works elsewhere, the rest of the world, generally real estate commissions are anywhere from like 1 to 3%, so they're significantly lower. And when we talk about some of the items in this ruling and some of the things that were not ruling in this verdict, because again it was a federal jury trial. It wasn't a judge saying, here's what I want to happen. This was a jury that made this decision. And I think that when you look at how this works, one of the big things that was noted in here is that under the rule from the National Association of Realtors, again, this is an independent organization. It's not a government. It's not. This organization said that if you are a member of this group, the National Association of Realtors, which you pretty much have to be in order to conduct business most places in the country as a residential realtor, a home seller is required to pay commissions to the agent representing the buyer.
Mm-hmm.
Not optional, required to. So if there's an agent representing the buyer, you are required to split commissions with them. And this is something that is just a huge thing in terms of, again, the jury found, coercive behavior and behavior that was in violation of antitrust laws. So I think that when you look at this, it's something where, especially as we've gotten more and more technology, where it used to be as a buyer, if you went back 30 years ago, a buyer's agent would actually help you find the properties because you didn't have access to the listings the same ways that they did. Well, if you just go on Zillow and say, hey, I'd like to look at this, yes, that buyer's agent might coordinate setting up a visit. They might, if you end up buying the property, they might handle a lot of the paperwork for you. But let's say that you're inside the 128 loop in Boston, just as an example, where I think the median home price in that area is somewhere like $700,000 or $800,000. And you look at the standard commission of 6%, so the buyer's agent gets 3%. Are you paying $24,000 for someone to fill out paperwork for you?
Zillow and Redfin have really crushed the buy side of it, Chuck, just because the inventory is at everyone's fingertips, and that access to information, it does start to make you question a little bit why this much has to go to the buyer side of things. I still think they should be compensated, but just the level of compensation, to your point, a little out of control.
Here's another piece, just when we talk about a conflict of interest on this. So you are the buyer's agent, Paul.
Mm-hmm.
How do you get paid more money?
The higher the price is on the home.
Shouldn't you be negotiating for me to get a lower price?
Right.
I'm not saying that buyer's agents are inherently immoral, because I think there are a lot of good ones. But it's also completely wrong to deny that there's a huge conflict of interest there, because the buyer's agent gets paid more if the home price is higher, which is not in the buyer's best interest.
Right. There's that balance of closing the deal versus, getting it at the lowest price possible. You'd like to think that most act in your best interest, but I'm sure of the 1.6, there's some fantastic ones out there, million realtors, and there's some that aren't. I ran into a structure where they had dual registration where they basically wanted you to use realtors on both the buy and sell side from the same company, so they collected that full 5.
Yeah.
And I just said that to me creates a major conflict of interest. I would never feel comfortable selling my home under that structure. I was on the buy side, so it didn't really bother me, but that practice to me blew my mind.
And the other piece is, okay, let's say that you do have a really good buyer's agent who's out there pounding the pavement, looking for stuff for you, and they're bringing stuff to you. Well, why should what they're getting paid come out of what the seller's agent gets paid?
Right. Instead, come from the buy side?
Yeah, I mean, let's say that your buyer's agent is doing a great job, and they're doing, this fantastic job for you. And the seller's agent might be doing just as good of a job.
Mm-hmm.
But now we've got this commission splitting thing where it's, okay, this is just the standard commission. It's not something where there's any realistic valuation of the work that's being done.
That's certainly fair. It just is one of those things. It is what it is, right? It
Yeah.
It is that 5 or 6%, and that's just the way it goes. And if you ask questions, it's more, that's how we do it. But I think on the buyer side of things, when you're buying your new home and putting 20% down, it's going to be hard to get anywhere close to another 2.5% from the buyer when they're already putting down the most significant purchase of their life.
And that's the thing, is it completely changes this. But if I were Zillow, first I'd be really upset that I lost $1 billion trying to flip homes in the hottest home market ever.
But they had a great algorithm.
So first I'd be really upset with myself if I were Zillow. But if you want to ask me where I think there's real value, if I'm Zillow, it's, hey, maybe I'm a buyer who's fine. I found my property on your platform.
Mm-hmm.
I don't want to pay a 3% commission to you because I did all the work, but I'll pay you $2,000 to handle all the paperwork so my deal goes through. That's a valuable service right there.
It's a good point. It's sort of the discount brokeragification of the real estate market. Like similar to the discount broker, the financial firms that did it with zero trades.
And if you look at it just in terms of, again, I'm just trying to figure out total, available market, which is kind of a dumb way to do this, but it is what it is. You got 4 million properties changing hands every year in terms of existing home sales right now. Even if you charge, look, it doesn't even have to be 2,000. I mean, again, right now, if the median home is, what are we talking, like 400,000?
400 would be my guess, yes.
So if you're at 400,000 and a buyer's agent's getting 3, you're getting $12,000 a year or $12,000 a sale on that on average. Okay, do it for 5 and handle all the paperwork, and let's call it a day. There's a huge business that you can make out of that. You're talking total available markets like $16 to $20 billion nationally that you can still run on that. So that's what if I were someone who had a tech platform and I'm seeing this, I say, okay, if this is how it's going to be, I'm going to provide the services that allow people who have already found the place that they're buying to close it without having to do any of the legwork themselves.
I'm not sure if there's nuances specific to different states and counties. That's probably why the barrier to entry is so high.
Yeah, even in New England, it's completely different trying to buy property in New Hampshire to Massachusetts, just as an example.
Right.
Like, I think New Hampshire, you don't even have like a signed. I think your signed offer in New Hampshire is a P&S, if I recall, whereas in Massachusetts, you sign an offer and then you have a separate purchase and sale agreement that you do, whereas I think it's all wrapped up in one in New Hampshire. Like things like that are different between states. And again, I probably just butchered it and got it completely wrong. So if there's any real estate agents who do business in both states, please correct us and text in. Tucker, what's the text line?
617-362-1385.
Okay. Let's take a quick break now, and when we come back, we've got trivia. And then we'll talk a little bit about WeWork. By the way, tomorrow we're going to be joined by Mike Simonson from Altus Research. He's been on the show a number of times. He's going to talk about what this ruling actually means as far as the real estate market going forward. So he'll give some good information in terms of where he thinks this will impact the real estate market in the future. But again, quick break, and we're talking WeWork when we come back.
Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, folks. It's Susan and Mike from the Armstrong Advisory Group to talk with you today about our top year-end planning tips, which are featured in our brand new guide for the month of November. There's a lot of information in this guide, Mike, that we can certainly use throughout the course of the year, but some of the tips that we've included, if you don't implement them before year-end, it's too late. What are those?
Yeah, so a lot of them have to do with retirement accounts. So, for instance, if you have a required minimum distribution, that's a 12/31 due date, and most of the custodians actually require you to do it earlier than that, so get on it if you have an RMD. If you're considering a Roth conversion, that also needs to be done by December 31st. You can't do it until your tax filing deadline. And 401k contributions, once again, must be in to your employer-sponsored plan before year-end. You have a little bit more flexibility if you have an IRA, but with some of those things, it's by year-end, not the tax filing deadline. There's also a big one to keep track of this time of year that a lot of people look into, and that has to do with harvesting potential losses. And given the way that markets have fluctuated this year, it very well could be that you have some capital losses in an investment portfolio, and at least looking at those and seeing how they could benefit you from a tax perspective is important. Obviously, caveat, speak with a tax professional or advisor when looking at this type of thing.
Great. Thanks, Mike. Folks, you can request your free copy of this brand new guide by calling 800-393-4001. That's 800-393-4001. You can also request your free copy of our top year-end planning tips guide by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Choose from a variety of half-priced late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only. Well, today is Apple CEO Tim Cook's 63rd birthday. Cook has served as Apple CEO since 2011 when Steve Jobs stepped down to deal with his illness. Before joining Apple, Cook worked at IBM for a dozen years and Compaq for 6 months before accepting the position of Vice President of Worldwide Operations at Apple. Trivia question today: what year did Tim Cook join Apple? Once again, what year did Tim Cook join Apple? Be the fourth person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away the Applebee's gift card on Friday's show. 617-362-1385. And the fourth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, you ever been in a WeWork?
I have not.
You might not get a chance to. Apparently, they're going to be filing for bankruptcy early next week. This is, I don't want to say entirely unexpected. They missed a bond payment on October 2nd, so this is kind of, expected at this point. But this company went through one of the craziest sagas I've seen. I think it was in late 2019 when they pushed out the founder. What was his name?
Yes.
Adam Newman?
Newman, correct.
Who, among other things, had been making payments to himself for, I forget exactly what. I think just something unrelated. It was some kind of weird payment thing that was going out to him. I believe he also tried to trademark We and then sell it to the company, but maybe I'm conflating a couple things there. But in any case, this company was valued at $47 billion in private markets at one point in late 2018, 2019, and now they're effectively out of business. It's unclear exactly what is going to be the future here. This is Chapter 11 or Chapter 7 that they're going through?
Chapter 11. Considering a Chapter 11.
So Chapter 11 is a reorg, meaning they'd probably just try to clear their debts and still operate. But what do they do that's unique? I mean, I don't understand how they think this is still a viable business model. It hasn't worked twice now.
To me, it's just a fascinating rise and fall story. I was looking back at their valuations. 2014, the company was valued around $1.5 billion, and Chuck, as you pointed out, they reached their peak valuation of $47 billion just a mere 5 years later, from 2014 to 2019. Then when they went IPO or were going to go public, they disclosed $1.9 billion in losses in 2018, and everyone started to look around and say, geez, they are burning an awful lot of money here. And then in a recent SEC filing from 2020 through 2023, they report $11.4 billion in net losses. So it just has been a cash burn like no other that we've seen here. And a business model, when I initially heard about it, Chuck, I did think, oh, geez, that's an interesting concept. But ultimately, it wasn't really unique or innovative to anything that hasn't been done in the real estate market before. And being in the office space sector, as we know now, just got absolutely murdered by the pandemic.
The conflict of interest, by the way, Adam Newman was reportedly leasing properties to the company that he was CEO of. So you can see how that could be a little bit of an issue there. So ultimately, this was another one of those companies. They were being pitched as like a tech lifestyle company. And you finally look at it and you go, no, they rent office space that's kind of dressed up and has espresso machines in it.
Exactly.
It's not a tech company. This is, Tucker, was it Allbirds who said that they were a lifestyle?
Didn't Allbirds say they were a tech?
They might have said that too. I can't remember. There was a lot of this stuff going on. I mean, there still is today. I don't know why every company has to be a lifestyle. Why can't you just sell really good X, Y, or Z?
Because then they can't demand as high as a valuation.
I guess, but I mean, how many companies in the world are actually lifestyles? Like 3? Lululemon.
Yeah, I was going to say that.
Okay.
You could point to them and say, yes, that's a lifestyle.
Chipotle.
Chipotle's a lifestyle.
McDonald's.
I was going to go McDonald's, actually. And waste management. Let's take a quick break. When we come back, we got the trivia answer next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You know, you hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, I mean, how much control do I have over that? I got none. I mean, I got to rely on them to pretty much do everything, not to mention the fact that, you know, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. You know, what about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
What year did Tim Cook join Apple? That would be 1998, and Cook was named the new CEO of Apple on August 24th, 2011. Winner today of the Financial Exchange Show t-shirt was Mark from Newton, Mass. And Mark's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only.
Paul, how do you feel about having a conversation about the financial insecurity of Gen Z?
It's going to be a pretty quick conversation because welcome to the party. Everyone feels it. You're not alone.
No, and this is not a generational thing. I mean, every generation, I've said this before, goes through its own unique challenges that they have to overcome financially. If you go back and look at the greatest generation that was born in, the late 19 teens and early 1920s, well, gee, they probably had the hardest stuff because they actually had to go to World War II.
Mm-hmm.
So yeah, that probably impacted their earning potential a little bit. You think? Then you have the baby boomers, born, 1945 through 1960. Okay, they come of age, they, go to Woodstock and everything, they're having a blast in 69, and then they get hit with a 10-year inflationary buzzsaw, which in hindsight we can look back and say, yeah, that was just a small part of the 50 years that they lived through so far in their, earning years. But ultimately, it was also the first 10 years that they had to be working, and they had high unemployment, high inflation, and this is something I've found that the longer I've lived. It's really easy to point to a 10-year period and say, oh, see, if you just go through that, you'll be fine.
Mm-hmm.
But when you're actually going through 3,650 days of that 10-year period, it feels really long and it's hard to be optimistic. So the baby boomers, as much as we point to them and we're like, hey, you've been benefited by 40 years of falling rates and being able to buy property cheap and yada yada. Well, the first 10 years they were working, it kind of sucked. Then you got Gen X. Everyone just forgot about Gen X. I mean, that's what Gen X will tell you at least. But Gen X, they're following the baby boomers, and so they're trying to buy property, and they've already been bought up because the boomers bought everything. Then you got millennials, and millennials had to deal with the financial crisis. Every generation has financial stuff that is hard for them. It's not always the same stuff, but I don't think it's uniquely hard or easy for any generation when they're starting out to make it financially. I think it's generally just hard when you're in your 20s and early 30s, even late 30s, even 40s. It's not easy in this world to make it financially. It's hard.
Also, just dealing with clients on a daily basis or just how most people live their lives, Chuck, typically you spend up to what you can afford, but right up to that ceiling. Most people kind of push that to the max. When you get a raise at work, it's oftentimes not just saved entirely. It's spent on other means of consumption. You look for the next house. You really try to get yourself as well positioned as possible. So that does create financial stress where you put yourself in the best position possible from a living situation, but oftentimes you're running yourself right up against, sort of the ceiling of spending. Not to say that you're not doing some saving, but that's sort of typical. That's the way things go. There's very seldom people out there who are making hundreds of thousands of dollars and living in a shack. You know what I mean? And saving millions of dollars over time. That's just not the way that the economy operates. So Gen Z is going to feel it. We felt it. It's just generation by generation. Everyone's going to live up to their means. That can create stress, but ultimately most get through it and come out on the other side. That's how it goes.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December, according to U.S. News and World Report. December is the start of the dry season on the island, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com, learn all about their 3 islands, and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Paul, there's a piece in CNBC. It's titled, "Why Working Longer is a Bad Retirement Plan." Why?
Because basically sometimes people don't get to work as long as they once anticipated with their plan, whether that's forced layoffs from a company or a physical or a mental sort of diminishing capability where you're no longer able to work at the same level that you were previously. So they're mentioning it's not prudent to just build yourself out to working to age 70. That's not in every industry an accomplishable goal.
It's true, but I guess
it's better than the alternative of spending down your savings if you don't have enough.
Well,
if you can do it, if you can continue to work.
I feel like this piece is making the argument that these retirees are being forced into retirement more often, whereas I'll make the argument that many of them are choosing to retire earlier, and they're just fine doing it.
Mm-hmm. They just get sick of their job.
Yeah, get sick of it. Whatever it is, like they just say, "Look, I'm done," and their retirements are fine. I think there's too much retirement panic that goes on sometimes, where I think individuals are increasingly too nervous about outliving their assets, whereas I think they should be equally nervous that, hey, if you have enough to retire, if you don't like working, stop working so that you can actually enjoy what you've saved.
Certainly, that's a part of it. I will say, psychologically, I understand that for years you've been focused on saving 30 to 40 years, and to turn on the spigot of beginning to withdraw from the assets can create some uneasiness there. So I sympathize with it. I would agree there are often people who underestimate the resources that they have, and others. I guess it cuts both ways, Chuck. Right? You've met with people before who have overly optimistic views of retirement and what they can spend. It does go both ways. Particularly in this area, I do think a little bit more fiscally conservative. There's people who get concerned as they approach retirement.
Yeah, there's some of it. I think that there's a little bit too much fear sometimes that people are going to run out of money in retirement when they can either, and I'm not even saying you have to spend it. If you got family members or charities that you want to gift money to during your lifetime, I think a lot of times people can do that stuff and get that money, out to the people who can enjoy it and use it more than just having it sitting in a retirement account somewhere in a lot of cases.
Mm-hmm.
Let's take a quick break here. When we come back, we'll do a little bit of Stack Roulette.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network. The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Hi, this is Susan Powers from the Armstrong Advisory Group. There are some important financial considerations to keep in mind as the end of the year approaches, so here are some crucial tips for you to think about. Our guide this month is called the Top Year-End Planning Tips, and in it, we'll walk you through key concepts like tax loss harvesting, family gifting, and properly calculating your required minimum distributions. All are important to your overall planning. Call our office today at 800-393-4001 and get your copy of this free guide that may help you finish 2023 with less concern about your financial strategy while setting you up for a positive start in 2024. Call 800-393-4001 and ask for your free guide today. Or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Wall Street's volatility continues as the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's DAV 5K is Saturday, November 11th at Fort Independence at Castle Island. Now, the race is sold out, but you can still help by making a donation right now. So go to dav5k.boston and help support these great American heroes. That's DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation.
Paul, what do you have for me for Stack Roulette?
Don't want to tip your delivery driver? Be prepared to wait, DoorDash warns. DoorDash is now exercising this policy on their platform where Dashers, the delivery drivers, can go and pick and choose which orders they want to deliver. As an order, someone who's placing their order, you are able to put in a tip, which I have a huge problem with that I'm going to get to in 1 second here.
Okay.
And then the Dashers will select which one that they want to fulfill. Obviously, the Dashers are going to gravitate towards orders that have higher tips than orders that don't have higher tips. My problem is you are tipping someone for something that has not been completed yet, so that creates a huge problem to me to have to pre-tip for delivery.
100% agree. If, let's say that you say, look, I'm going to tip 20%, and then it takes 2 hours to get there, can you don't have the ability to reverse the tip, do you?
Not to my knowledge. I would highly doubt that.
I understand what DoorDash is trying to do because they're trying to create an incentive for people to tip more so that people get paid more, and so they're what do they call them? They're Dashers, I think. They the people who are delivering, they stay working for the company and keep delivering because they're contractors. But the fact that you have to tip in advance, I think, is a problem. I mean, think about ride sharing just as an example. If you use Uber or Lyft, once your trip is completed, you're then asked, hey, would you like to enter a tip? And so you put it in there. Imagine if you are tipping in advance of there. And what if your driver goes the wrong way and then, you miss your flight or you miss whatever it is you're trying to get to? Yeah, there's a reason why you tip after service, not before.
An additional thought that just came to mind is it would be better if DoorDash structured their system similar to the ride-sharing system where Uber assigns a rating to me as a rider. And then I believe, I don't know the full mechanics of it, because I have a higher rating that I'll be picked up sooner than someone who might have been difficult on the app. The same thing should apply for a DoorDash order. If you tip well, then you should have a higher rating and thus get in their queue to be fulfilled sooner. So that is actually rewarding those people who order and tip well when merited. But I guess there could be issues that if you have a lot of bad experiences, maybe you don't tip as well. But maybe the rating piece should just be built in, just a thought that came to mind. That would be better than just tipping ahead of time.
Now, the other thing that I will say that might be unfair, let's say that we move to a post-tip setup in that case.
Mm-hmm.
Here's one thing that can be unfair to someone who's a delivery driver. And we've seen this with, it's mostly happened on the chain side of things, but I'm sure it happens at individual restaurants too. Panera in particular has been known that around lunchtime, if you place a to-go order, the kitchen's just overloaded because everyone puts in orders for this time, whatever time of day it is.
Mm-hmm.
Let's say that your delivery driver gets to the restaurant at the time they're supposed to pick up the food, but it's not ready. Do you punish them because the restaurant was behind on making your food?
Right.
It's really
hard. That's hard.
It's not their fault that the restaurant took too many orders and couldn't get them out the door on time. So I don't blame the delivery driver for that in that case. And taking a tip away from them could actually be unfair because now they've been waiting, around all this time, and maybe they, run 8 red lights to get to you, and they do it as fast as they can. And you say, well, I'm not going to tip you as much because you're late. Maybe it's not their fault.
Very valid point.
So it's all kind of messy there, and it continues to, for me at least, to come back to, hey, if you really want to run a business that is dependable and repeatable on delivery, it's hard to do. There's a reason why these businesses haven't really existed before, and typically your only delivery for food comes from the restaurant itself. So I'm still uncertain about the long-term prognosis of these companies because here's the other thing that's fascinating to me. Somehow they've built a business model where in almost every case someone loses. DoorDash takes a 30% cut off the top from restaurants, just as an example.
Mm-hmm.
So if the restaurant doesn't raise its prices on its DoorDash menu, it's selling food at a loss.
Yep.
So the restaurant loses in that case. If the restaurant bumps its price up by 30% to compensate, then you, the customer, is paying more. And lastly, the driver, hey, they're dealing with, they're paying all their maintenance on their car, they're doing all that stuff, and they're still subject to the whims of two groups that are completely outside their control. They're not employed by the restaurant. So again, if the restaurant's late, they can't do anything, and they have to be tipped by you for most of their compensation.
Someone just texted in, if there is no tip, people only know they will make $3 or $4. Many will not tip after, so someone will spend 40 minutes and almost make nothing, no different for Uber or Grubhub.
And that's why I'm just not sure about those businesses as good businesses long term. They have incredibly high turnover because they don't pay very well, if not for the tipping of people, and that's just inconsistent.
Because they operate on razor-thin margins. Really,
Yeah.
to me, the only saving grace to the industry, and this is years away, would be autonomous vehicles. So you cut out basically the employee side of things because it's so costly to cover them. That's the only way you could create some margin there, and that's not imminent at all.
So it's a tough business, and I feel for the delivery drivers because they're between a rock and a hard place. It's not their fault that this is how it was built, but it's just a tough business that in any situation, one of those parties is getting hit. It's either the individual's paying more because the restaurant raised its prices, the restaurant is getting paid less because DoorDash takes its cut, or the driver's getting paid less because someone's not tipping because they're paying the extra prices.
Yep.
It's a tough business in my opinion. There is a company called, how do you pronounce this, Paul? Is it Cosm, C-O-S-M?
I thought it was Cosm when I was reading it,
Or is
but
it
that's
Cosma?
anyone's guess. Well, there's no A.
No, but maybe the A is invisible. It's the opposite of a silent letter.
It's just not there.
It's
but
an
it's
invisible
there.
letter. So Warner Brothers Discovery is teaming up with this company called Cosm, and they're going to be opening these 60 to 80,000 square foot venues that hold about 800 people, and they're going to be domed venues that, because of the cameras that they use in this and that, basically recreate the experience of watching an NBA or an NHL game live at midcourt or center ice. And this, I think, is just awesome. This has always been my dream for VR is, hey, just sell a bunch of seats in your VR headset for what it's like to be at center ice or whatever, and it's fine. This is saying, no, we don't want to do this via headset because that's too hard and maybe the computing power is too much.
Mm-hmm.
But let's do it on a giant screen and then serve you food also. And this, I think, is really cool.
I just immediately wonder what the experience is like. If they can replicate it, you're right, it's really cool. I just don't know how viable that is. I thought VR was always going to take this place of being that option to get that immersive experience, but I just don't know. It's sort of prove it to me first.
Even if it's not that immersive, imagine instead of going to a sports bar to watch the game, you go watch this and you're surrounded by the screen.
With like it being a luxury sports bar too.
And you got 800 people there cheering with you.
That would be awesome.
Even if it's not perfect, fine. I'll try it once. I'll give it a shot.
That's the
first
key.
one. The first ones are going to be in LA and Dallas, so we got a ways to go. Let's take a quick break here for the rest of the day. Back at it tomorrow for more financial exchange, including Apple earnings.